New York. Reuters, U.S. Treasuries were steady on Tuesday before the Treasury Department is due to sell $33 billion in two-year notes, the first sale of $99 billion in coupon-bearing supply this week. File photo: a U.S. dollar note is seen in this June 22, 2017 illustration photo. Reuters, Thomas White. Illustration. File photo: 2-year note yields US 2YT equals RR, which are the most sensitive to rate hikes, were holding just below an almost 10-year high of 2.598%, on expectations the Federal Reserve will raise rates at least 2 more times this year. Concerns about the U.S. deficit and rising government debt needs are also seen as weighing on bonds. We had a little bit of a backup overnight with the looming supply in treasuries, before getting a bit of a bid early in the New York session, said Justin Lederer, an interest rate strategist at Cantor Fitzgerald in New York. The government will also sell $36 billion in 5-year notes on Wednesday and $30 billion in 7-year notes on Thursday, in addition to $16 billion in 2-year floating-rate notes on Wednesday. A rally in Italian government bonds reduced the safety bid for U.S. debt early on Tuesday. Italian bonds paired gains, however, after news agency ANSA reported Eurosceptic economist Paolo Savona as being the pick as economy minister in a new anti-establishment government. Italy's bonds have seen 6 days of heavy selling on concerns about the high spending policies mooted by a potential coalition government in the Eurozone's third-largest economy. Demand for this week's U.S. debt sales will be watched for indications on whether last week's sell-off attracts buyers, or if investors are reticent to buy the debt with further weakness possible. Benchmark 10-year note yields US 10YT equals RR rose to 3.128% on Friday, the highest since July 2011, before falling back to 3.065% on Tuesday. The Fed will release minutes from its May meeting on Wednesday, which will be further evaluated for indications of how many rate hikes are likely this year. The U.S. Central Bank left rates unchanged at the meeting and expressed confidence that a recent rise in inflation to near the U.S. Central Bank's target would be sustained, leaving it on track to raise borrowing costs in June. Reporting by Karen Brettel, editing by Andrea Rechor. Standards. The Thomson Reuters Trust Principles.